Welcome back to Alpha Recap, your daily market rundown from stockalpha.ai. We've got a lot to get through from today's risk-off session. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, great to be here. Tough tape today. A pretty broad pullback across growth names and small caps. Plenty to unpack.
All right, quick headlines to set the stage. Markets closed down across the board. The S&P 500 ETF finished the day down about 1.7%. The Nasdaq 100 ETF was off roughly 1.8%. And small caps, the Russell 2000 ETF, got hit the hardest, down just over 2%.
Yeah, that paints the picture. A classic risk-off day where the leaders, tech and AI-exposed names, took the brunt of the selling, while a few commodity and energy names held up better.
So, what really stands out here is the mix of headline risk and idiosyncratic moves. There wasn't one macro shock. It was more like a convergence of news that amplified uncertainty.
Exactly. Two corporate stories really amplified the mood. First, a small-cap hardware name plunged, down about 23% after a sharp negative headline. And then a legal development tied to an AI supply chain name. A criminal charge for a co-founder in an export-related case hit sentiment across AI hardware and contract manufacturers.
Right, and those kinds of headlines tend to cascade. When one high-profile name in a cluster gets hit, traders reassess valuations across the group, and that creates a domino effect, especially after a strong run earlier in the year.
Meanwhile, there were bright spots. FedEx reported a stronger-than-expected quarter and raised guidance, and the stock jumped about 9%. So not every headline was negative.
Big move. That helped transportation and some industrials hold up in pockets. But it wasn't enough to offset the broader tech and small-cap selling.
One of the broader themes pushing this was Fed and macro uncertainty. Analysts note that inflation readings and labor resilience have slowed the market's rate cut hopes. So the market is acting like rates might stay higher for longer, which pressures rate-sensitive growth names and REITs.
Yeah, when traders start pricing out cuts, multiples on growth stocks get compressed. That's part of why we saw the Nasdaq folks underperform relative to the S&P, and small caps really lagging the most.
And layering on top of that were regulatory and policy notes. A bank charter development and an FDIC shift got looped into the tape, plus crypto regulatory momentum. Those items keep volatility elevated because they touch different corners of market liquidity and investor confidence.
Not a great day for chip stocks and related hardware names, honestly.
Short reactions.
Wow, big moves.
Not great for chip names.
Let's break the sector action down so listeners get a clearer picture.
Good idea. Technology and communications underperformed. Profit-taking and AI-exposed large caps and headlines around that legal case accelerated selling. Media and ad-related names slipped as well when subscription and ad spend narratives got reassessed.
Industrials and materials were mixed. Some cyclical industrials tied to the small-cap weakness were weak, but defense, aerospace, and specialized manufacturing names showed resilience. Materials and miners had pockets of strength. Copper-focused stories and deal chatter helped there.
Right, and commodity names were interesting. Energy prices held up on tight supply talk, and demand expectations tied to electric vehicle growth, which supported certain integrated producers and exploration names. Utilities were mixed. Defensive interest versus rate sensitivity created a split.
Real estate was another mixed bag. Deal flow showed signs of life in some commercial and industrial REITs, but rising financing costs still weigh on the more leveraged players.
And in financials, the charter and FDIC updates kept a cautionary tone. Some regional banks slipped even without a single systemic issue. That's deposit sensitivity and funding dynamics at work.
On crypto and blockchain, the picture was nuanced. Reported regulatory momentum can be both positive and negative. Clearer rules are welcome, but enforcement chatter triggers volatility in related equities and miners.
Let's call out a few individual names to make this concrete. FedEx was a standout. The stock jumped about 9% after the quarter and better guidance. That was one of the clearest positive outliers on the day.
Sivers fell about 23% on a headline-linked development, and that really fed into the small-cap weakness. Then, the legal charge tied to the co-founder of Supermicro Computer triggered selling across AI hardware supply chains.
There were also product and commodity stories. A photonics company launched a new external cavity laser that attracted interest, and tech got some attention on a copper price scenario. Analysts referenced a $5 copper price scenario as part of the strength in miners.
Those commodity narratives matter because they can cushion a broader risk-off day. When copper or oil stays firm, materials and energy can act as a relative safe harbor compared with full-on growth names.
Let's touch on technical internals. Breadth deteriorated as the sell-off progressed. Momentum indicators shifted from neutral toward negative on short and medium-term timeframes, and volatility gauges ticked higher. Traders watched intramonth support levels closely. A decisive breach could invite more technical selling, while stabilization at multi-week support could bring a relief bounce.
That's the classic crack or rebound question. If headlines come and economic prints surprise to the downside for inflation, we could see a relief rally. But another headline-heavy day could push stops and deepen the pullback.
So what should listeners watch for next? The big items are Fed speakers and the next CPI and PPI prints. Any signals on the timing of rate moves will move rate-sensitive sectors. Earnings follow-through and conference call commentary will create intra-sector winners and losers. And legal or regulatory developments related to the hardware names could spill over again.
Also keep an eye on commodity prices, copper and oil, since strength there could keep materials and energy relatively bid. From a market structure lens, watch small-cap leadership or continued weakness in the Russell 2000 ETF as a risk appetite signal.
Quick thought. Traders should expect choppy sessions. Today showed how concentrated headlines can trigger outsized moves even when macro data is not dramatically changed. So position sizing and stop management mattered today.
Yeah, and one more thing. This is informational analysis. Analysts note market drivers and sentiment. This is not a suggestion to buy or sell anything or personalized advice. Always consult a licensed professional for investment decisions.
Short reactions.
Point taken.
Good reminder.
Let's wrap with 3 clear takeaways for listeners. 1. Today was a risk-off session led by tech and small caps. The S&P 500 ETF was down about 1.7%. The NASDAQ 100 ETF down about 1.8%. And the Russell 2000 ETF down just over 2%. 2. Headlines, corporate, legal, and regulatory amplified selling, with a small cap plunge and an AI supply chain legal charge standing out. 3. Watch Fed messaging, upcoming inflation prints, and commodity prices. Those factors will likely shape whether this pullback stabilizes or deepens.
And a final practical tip. With volatility up, expect dispersion across sectors. Earnings calls and guidance will matter more than usual, so focus on company-level fundamentals when you're parsing the noise.
All right, that's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next session with the morning pregame and the follow-through on earnings and Fed commentary. Until then, take care and keep an eye on those headlines.